All right. Good morning, everybody. Just a heads up, we got a little bit of a storm. It's already flickered the power once. I've got backup internet, so all right. I didn't lose my internet because of backup power. But if we get disconnected, I'm not going to restart the stream, and we will do it again tomorrow. So just wanted to give you a little bit of a heads up. Anyways, it's FOMC day, hump day too. So let's get over the hump, get past this, focus on OPEX at the end of the week, and go on from there. There was a interesting little article from Bank of America talking about emerging markets versus, and really it's an interesting read. I'm going to see if I can find the full article because these are just little excerpts. And I know the last time I talked about a Bank of America article, people were wanting the original. I don't have it, but I think I can get that one. Otherwise, today's going to be just waiting, right? Waiting on FOMC this afternoon. It seems like we're pretty confident in what we're going to get. As always, if you haven't heard me talk about it before, if you want to know what's going on with the Fed, or if you've ever wondered how people know that they're pricing in a cut or they're pricing in a hike, if you're curious about how people know that, is you can see it, right? So if you go to Google and just search for FedWatch, behave, you can find this page here. It's free. It doesn't cost you anything. It's run by the CME group. Once you're on here, you scroll down. These are the dates that you have available to you to look at, and you can see the probabilities of the next meeting. So today, for an example, we got the 17th. There's a 6% chance that they're going to cut by 50 basis points. And there's a 94% chance that they're going to cut by 25 basis points. Now, I've had people say it's a little confusing. They don't quite understand what we're looking at here because there's more than one number. So just to make it easy on yourself, just pick one number, and it doesn't even matter which one. I usually pick the higher number. So we're at 450. If we get a cut, we would be at 425, right? Just ignore the other number. That's how you would do it, right? That's how you read that just to make it nice and easy. If you look down below, it'll show you where we were. Because looking at this single bar, this snapshot in time, we can see that we're at a 94% chance of getting a 25 basis point rate cut. But where was we, say, a week ago? Well, we were at 91% a week ago. Last month, we were at 85%. So we can gauge, it's not as good as a line graph or a chart that shows us, the value over time, but we can get kind of a feel for what the market has been doing. So if they're, quote, pricing in a rate cut, we can see that here, right? And if everything begins to change, we can see that too, because we'll be able to look at what was it yesterday, what is it now, and is it increasing or decreasing, right? So that's kind of the idea behind it. You want to keep track of this, right? Because sure, headlines are good, and if somebody else is going to write about it and you can read it, then great. But knowing where it's coming from, getting the information for yourself, and just staying informed, to me, that's a better approach. So there it is. It's the CME group. Just Google FedWatch and you'll find this page. Easy enough. Just thought we'd check the gamma briefing. There's nothing in there, nothing new in there. So looking at what's going on, the UK is up a quarter. The NASDAQ is down the most, but not even at 0.25%. We got Japan, small caps. The whole world is sitting on its hands waiting for this data. We're going to get some housing numbers. Really, nothing is expected to be out of line. And then we're going to get FOMC. Now, because it's Wednesday, we have our crude oil inventories at 10 o'clock, or excuse me, at 10:30. And it's a little off here between previous and consensus. This could, out of pure boredom, cause some market reaction today. Markets get tired of sitting around doing nothing. They get bored and start doing silly stuff. So just keep your eye on the clock for 10:30. Otherwise, we're just waiting on Powell. And they've very clearly stated their intentions ahead of time, right? It's always about, did they articulate, do we have any forward guidance, anything like that? And they've done a really good job. Nobody's expecting a surprise today. And if they do cut 50 today, I think it'll scare the market. Going to have everybody thinking that there's something really wrong. And of course, you don't want to spook the markets. The call wall did roll up again. It's now at 67.62. That clears the way to the upside. The put wall still in the same spot. No change there. So we're still just waiting. As you can see, we came back down and we tested that 3-period moving average. If that breaks, the next target is the 10-period moving average. And I was looking around for maybe something a little short term, just to the downside, for like the end of the week, something like that. And an SPX butterfly at 65.50. I kind of like that. Depending on how far out in time you go, that might cost you 15 or 20 cents. But, it's a $5 wide fly. Anything less than 50 cents says you're in a trade that could make, 400, 450. So just kind of looking at that, I would shop around on the dates between today, Thursday, and Friday, just see which one you like the best. We're not talking about, big sell-offs, and even this pullback to the 10 wouldn't even really be bearish. It's just a part of price in its movement, right? It's just what we're doing. It makes sense that we come back to the 10 because that's what price is doing. It's just moving like a wave. So that's not bearish to come back. 65.50. Take a look at it, see if you like any of those options. That would be using the puts to build a butterfly. Now you could do it with the ES, but when it comes to futures, what they call, quote, complex options on futures, most brokers aren't going to let you do it. So you'd have to do, individually the 2 puts long and then the 2 puts short. And it probably even then wouldn't recognize it as a butterfly, as a whole unit. So it'd be a little weird. We're still in 0 gamma, which implies if we begin to sell off, dealers will buy into weakness. If we try to break out, dealers will sell into strength. It's what they've been doing. It's what they will continue to do because we're still above 0 gamma. 0 gamma is lined up on the 20-period daily moving average. And then below that, we got the volatility trigger. So if we do fade from FOMC and just from the blackout and everything else, then the 10, the 20, the volatility trigger, and then below that, the 10-week. and then the put wall. We got to ignore this market maker move. As we talked about all week, it's OPEX triple witching. And in that environment, this will show up. And we can't tell if they're really hedging or if it's just because of their role. So even if they were hedging, we wouldn't be able to tell from this. Looking at the ADR, we didn't do anything yesterday. We're not expected to do anything until FOMC today. So stay inside the two ADR lines. We did get an inside day breakout and we've already recovered. The thing is, if you get an inside day breakout and you manage to get back inside again, you don't want to go back outside of the box. So it looks like that's what we're trying to do here. We're trying to break back down. This isn't good. You're supposed to keep it. If we do get back outside of yesterday's range, then break this Globex low and aim for the ADR, 66.41. Back in the day, there was a cog line there at 66.41 or 66.42. I can't remember. I'd have to go look. The 42.41 area was a cog. It's not anymore because I don't validate it, but it always is on my radar. Not that it would matter at this point. Anyways, so from 53 to 42, 41, it's not bad. It's a 10-point play. Give you something anyways. 10 points, 15 contracts. You only got to get like 6 out of there. Today's floor pivot is higher than yesterday. That's bullish. Price opened underneath it. That's bearish. Those two kind of cancel each other out. It's not a narrow channel, but it's not really wide. Like say back here on Friday, it was a lot wider. A narrow channel, say like Monday, is this one isn't even as narrow as it could get. It can get so narrow, all you see is the floor pivot, no channel at all. So a wider channel implies if we try to break out, that the breakout doesn't stick. Just keep in mind that these channels don't make price break out. It don't make price do anything. And it's just giving us a read on what to expect if we did get a breakout. But a wide channel like we have here does suggest that if we break out, we just come back in again. It's been a narrow couple of days. So the S&R lines are likely a lot closer. We can see that we've already checked S1. If S1 fails, then we're going to S2. That's 66.40, 66.41. We already had that level from the ADR. So it's just another confirmation of the same level. I like to get the same answer from multiple sources. Now there is an S1 R2 play, right? Since we have went to S1 and it did hold, then, you know, technically speaking, we do have that on the table. And so far we have an MDP, missed daily pivot. So if we don't get new lows in the Globex, we could get up here and challenge this floor pivot, get above that, and then we've got R2 on the table. 67.11 cog line. Yes, hump day. I mean, FOMC weeks are always boring, but I've learned that it's going to be boring, and so I always have a lot of plans. I've gotten a lot done this week. I didn't get a lot of trading done, but I got a lot done. So we still have a really tight distribution. Singular bell really tight. I mean, this is a market waiting to go, just to get out and go somewhere. It would be useful to measure the week's range that we have right now and then project from the entire week's range the quadrant lines that we use, like the 111, the 1236. You could do like the textbooks suggest and run 50% and 100% and treat it like a big event bar. I wouldn't necessarily be against the idea, but the closer levels would be the 111 and the 1236. Either way, that 66.41 that we've been talking about, it's really close to last week's point of control. So another reason to believe that if we break our own Globex low, we're going to head down that direction. But if we break that 66.40, then we've got an air pocket down to 6,600. Fast move, right? We tend to move through shallow areas relatively quick. Ten-day, 30-minute volume profile in TPO, the value area is really wide. And we've got these distributions from multiple places. We got one up here, one where the point of control is, another one down here. Now we're taking these off the table, but it's going to take another day and a half to get to these candles. And these candles are what made this point of control. All right. So it's going to take a few days to wipe that volume off. And it's going to take at least a week and a half to start to wipe that volume off. This is what built that point of control, just these few days, Thursday, Friday, and then to Monday. Just that. We're so close to moving this point of control up that I would be surprised if it's not up there this afternoon. Certainly by tomorrow, we expect it to be up there. So 66.70 will be the new point of control. And then we'll just be looking at this value area low to see when it gets moved up. And when it does get moved up, unless we get a radical drop in the overnight, it's very likely that we're going to see a narrower value area, something like 66.30 to 66.96 or 97. That'd be a really narrow value area. But all it would take to throw that out the window would be to get a steep drop down below that 66.40 and then have them come in with a bunch of buyers and put in a big footprint down here, 6,600, 6,620, and then that would define the lower area of this value area. That VPOC is off the table. Ran that over. We don't have a new one from yesterday, so we really don't have anything. You can see the trend on the week. Each one of these just sort of moving in that direction. If we were to snap a Linreg line, it's very likely going to show that same kind of curve. We got nothing. But this isn't bearish, right? Got to kind of continue to say that. It doesn't matter that we're fading a little bit. That doesn't put us in a bearish bias. Every metric we have is either throwing divergence signals or is just still showing straight bullish signals. And there's just nothing for a short signal. And the sneaky suspicion that I have is there won't be any until we're suddenly everybody's shorting all at once, right? Like I don't think we're all going to get the memo that says we should, slowly start to begin developing short positions. I don't think it's going to come out that way. Sometimes it does, right? You can see it coming in advance, and we all just slowly transition into a sideways market and a slightly bearish market. I don't think we're going to get that. I think it's just going to be like snap your fingers and ta-da, we're suddenly in a short market. But to try to time that is impossible. We're at 3 1/4 above the 10. kind of working our way back up after the first. But you can see that we're not back at these extreme levels. Yeah, we're above the 3. And if we zoom out, sitting at this current spot, if we look back, we've been higher than this before, notably in the earlier part of the year and in 2024. We don't stay up there very long. Generally, we peak up and then just drop right back down again. So we haven't had any of these expansions where we pop up into 4.5 or 5 and then drop back down. And it's likely that's the sort of behavior that we're going to get today, or even into the end of the week, that it could be, slightly positive. The market gets exuberant, gets a solid 1.5, 2% move to the upside. And then we start to digest that and maybe even pull back from that. This says it's possible that we have the room to move that far to the upside. Just because we have the room to move doesn't mean we're going to move. Looking at the distance from the 10-day, we're not even 1% away from the 10-day. So we're not overbought. We're not overextended. We haven't moved too far, too fast. And it doesn't owe us any sort of pullback or mean reversion, which isn't a surprise because we haven't done anything for 2 days. Gold miners are down. Bitcoin is down. Chips are down. There was news about China trying to bolster its own in-house chip developer, right? They've got a NVIDIA type company, and they're trying to bully other companies in China from using NVIDIA's chips, that they want companies in China to buy Chinese chips. And that smacked NVIDIA down this morning. It's putting pressure on the chip space. Mags are 7. The Mag 7 is down. So, I mean, really, we don't got anything that looks good. We got China, nat gas, which is kind of a joke. The VIX is up. Bonds. Really, that's it. And that's what we would expect on a day like this, right? Getting in front of FOMC, there's no expectation that we're going to, have a rally morning. But keep some balance on the idea that, sure, we've got the Mag 7 down and silver and Bitcoin and, precious metals, all that, but they're not down radically. And it's not like we're getting some flight to safety with everybody just selling as hard and fast as they can sell. It's not like that at all. Just a little weak. So we are waiting on data. Keep your eye on the clock. 10:30, we're going to get the crude numbers, and there is some discrepancy there, so that we could see some volatility at 10:30. Otherwise, we're waiting on Powell. Short, simple, and sweet. Keep your eye on the clock, guys. Be careful, be safe. Look around for alternative markets to trade. If you can't trade the ES and the NASDAQ because they're not really doing anything, you've got copper, gold, oil. There's always something. And if not, just, get some honeydews done.